I'm Philip Borkin from JBWere's Investment Strategy Group. For some time, our base case has been that despite a likely slowing in global growth, recession would be avoided. And that's obviously important for markets. The trouble is, of course, this year our caution has grown, and there's been a few reasons for that. First is that economic data has deteriorated more than expected. And as well as that, policy uncertainty from the likes of Brexit and the US-China trade conflict has been extremely elevated. But our belief has been that as long as that policy uncertainty recedes at some point and the data stabilises, we'd be able to turn more positive again. Well, encouragingly, over the past month, we think there have been steps in the right direction. Starting with Brexit, while it's still incredibly unclear when and if the UK will actually leave the European Union, what has become clear is that the appetite for them to crash out or leave without a deal is very low. They've actually signed an agreement, or Boris Johnson's latest withdrawal agreement. They've actually voted to accept that. On the trade conflict, again, a lot of uncertainty still admittedly, but at least the two sides are talking again, and it does appear that progress has been made to reach some form of interim or phase one deal. And then on the data flow as well, again, right now, some tentative signs that the weakness in data we've been seeing is starting to stabilise. It's obviously quite encouraging. And then finally, we've also taken some comfort from the latest US reporting season. Going into it, analysts were quite negative. They thought that there'd be actually a slight reduction in EPS growth for the year. But the median company on the S&P 500 has actually recorded 5% positive EPS growth, which again, quite encouraging. Of course, it's far too early to say that we're out of the woods. It could quite be the case that the trade conflict escalates again. We've obviously got US political headlines. There's margin pressure starting to come through in a few economies. So there's still reasons for caution. But we think at the very least, the developments over the past month keep our base case intact. And so we're encouraged by that. Now, to be able to turn more positive from where we are today, we really need to still see a few more things. Firstly, and it probably goes without saying, we actually need to see pen go to paper on this trade deal. There's some speculation that it will happen, but we actually need to see the two sides agree on something. And also, and probably even more importantly, we need to see more concrete signs of stabilisation or even acceleration in the data. Tentative at the moment, we need to see more evidence of that. So if we get those, then we think that the world will be in a slightly better place. But like I said, steps in the right direction at the moment. At the very least, our base case intact. So we've been encouraged over the last month or so. I'll leave it there, but of course, if you have any questions, please reach out to your JBWere advisor. Thanks.